Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia. And today, once again, I'm joined by my brother Brian, partner at As Good as Gold. And today we have a very special returning guest. I speak, of course, of the incomparable Lynette Zang. Good morning, Lynette.
Good morning, Lynette.
Well, thank you. It's a little bit later than that here, but I'm very happy to be here with you guys today.
As are we. Look, lots going on, lots to talk about. But what I'd like to do, just in advance of our discussion, just highlight a couple of really important events that are coming up, Brian.
Absolutely.
As you know. We've got an Australian Gold Conference in Sydney that's coming up on 29th and the 30th of August. Now, in itself, that's exciting. Brian and I have been to just about all of the events. There are 500, 600, 700 people attend at this event. It's the big one nationally, and they do a great job of it. Kerry Stevenson does a wonderful job of it over there.
Always.
Yeah, and always there's always great speakers there. And this time, most importantly, and why I'm really promoting the heck out of this, is that the main keynote speaker on the event is Lynette Zang.
Wow.
Yeah.
And we're talking to her today.
The main keynote speaker.
But Lynette, and there's more exciting news to come, but what I'd like you to do, if you could, just share with our viewing audience what you might be mainly talking about at that event.
Well, it seems like I know something that a lot of people don't know because I've studied currency life cycles and the patterns around them since 1987. So I'm quite clear on where we are in this trend cycle, but there are those repeatable patterns that are really obvious. So how do you know, regardless of the garbage that the central banks spew or the government spew to keep you calm and keep you in the system, how do you know, regardless of what anybody else says, that we really are at the end of this life cycle? What are those patterns? What should I be looking for? Excuse me. So that's going to be the main topic, to try and give people the tools to make educated choices that put their best interest first.
Wow. I'm
looking forward to it.
Yeah, absolutely. It's a must to be there, isn't it?
Yeah.
That's the Australian Gold Conference in Sydney, August 29, 30. What we're going to do, if you'd like to book your early bird investor tickets online now, we will include a link to the event in the video description below. So no excuses. Get on board straight away and lock in your seat at the event. Now, what makes it even more exciting for us is that a few days later, we're going to have a meet and greet VIP evening with Lynette Zang in Melbourne and in Adelaide. So the event's going to be held on the 1st and the 4th of September. So these are going to be quite unique events because
Melbourne is the first. Melbourne is the first.
Didn't I say that?
No, you said the 1st and the 4th, but it could have been both cities, the 1st and the 4th.
Well, okay. All right.
Melbourne the 1st.
Melbourne the 1st, and then we've got Adelaide on the 4th. Exciting stuff. And to have a guest speaker like Lynette is just unheralded, really. So we're really looking forward to that. So we're going to provide, once again, the link to both of these events in the video description below. But we always sell out, don't we? Always sell out. And we've got a couple of hundred seats available in Adelaide. Melbourne, not quite as many as that, I don't think, but we will fill it up. There's no doubt about it. So the important thing is to get your seats early to make sure you actually get out. And we're going to have drinks, hors d'oeuvres. It's just going to be run a little bit differently. It's an opportunity to actually catch up with Lynette after the event, after she's spoken, and just mingle, because she'll be mingling with the audience, which is fantastic.
Yeah.
That's actually my favorite thing to do. I mean, I love meeting people and hearing their stories and having conversations. So I'm so excited about this, all three events. I can't even begin to tell you.
Yeah, well, we had Jim Rickards a few years ago, and we did the same sort of thing, didn't we? And he didn't get to sleep that night. I mean, the demand on Jim, everyone wanted photographs taken with him. They all wanted to talk to him. This will be exactly the same. So we are really looking forward to this. I guess we better get on with the...
Absolutely.
On with business. Okay. The world is awash in debt, Lynette. It's, unbelievable. And we could talk about this all night without going any further. And there are so many other topics as well, of course. But I want to refer to a gentleman by the name of Greg Manarino. I think Greg does this better than pretty much anyone other than yourself, Lynette. There's a way he...
Okay, I love Greg, and we all have our place.
The way he describes debt, it's scary, but everyone needs to understand this. Yeah. And I want Lynette's comments on his presentation here. So here's what he said. This is writing for the Trends Journal. He said...
Yeah, my friend Gerald, too.
Yeah, Gerald, fantastic as well. Every second, this is what he said, every second of every day, 24 hours a day, every day, global debt is climbing. The big secret is this: it can't ever stop. It can't ever stop because at its core, the modern monetary system is debt-based. The entire world financial system is totally dependent on the relentless acquisition of exponentially more debt in greater and greater amounts just to function. And what it costs an hour ago just for the system to function will require even more debt. This is really staggering, isn't it? People need to understand this. It will require even more debt an hour from now just to function. Central banks, to keep the debt-based system going, must inflate. That is, they must create more debt. Central banks create only one product: debt. The ability of a central bank to produce debt and then issue that debt is how they stay in power. Central banks understand that the current monetary system has been pushed to the breaking point. They themselves have done this. Moreover, they have been aware for decades that this would eventually happen. They have been planning for it.
Yeah.
The first stage is the breakdown of the current system, and it's well underway. Which can be seen in skyrocketing inflation, worldwide inflation, and rising labour costs. Lynette, your thoughts on all of the above and what's next?
Well, I absolutely agree with every single word that Greg said, because that is absolutely accurate. And they did create this with all of the money printing, and I'm going to bring you're going to have your own. I'm bringing them with me. Okay. But how easy is that to just create this debt-based money? And every time they do that, the value that is out there in the rest of the monetary system, that purchasing power value goes down. But what the central banks have absolutely done is they created the debt bubble, starting with Paul Volcker, who ratcheted interest rates up to intraday 21.5%. And then we've been in that bond bubble ever since the 80s, right? But now they have popped the bond bubble by raising the interest rates, and not necessarily at the speed, because going back to what Greg was saying, that means that as these corporations, if they even, and this is questionable, if they even have the ability to roll that debt over and take on more debt, that's the part that's questionable with interest rates at this level. Because when they lowered the interest rate, the goal was for corporations to redo the debt that they had on their books at a lower interest rate, which they did. But then they kept adding to it. And so now the bubble that had really popped in 2008, the system died. You know, you guys, I've been saying that forever. It's why I started the urban farms and all this. It was just all of this free money was about keeping the system going, growing more debt till they could get the next piece in place or the next iteration in place, which their goal is for it to be central bank digital currencies. My goal is for there to be a component of gold that is convertible from whatever that new currency is, because until they do that, it's not over. This isn't over.
Yeah.
So I agree with everything that Greg said and more. And yeah, I mean, the writing is on the wall. It has been since 2008, but it's speeding up very quickly now. We've got, I mean, you don't hear anything about the LIBOR SOFR shift. And I was just reading an article earlier today about private equity and the debt that they hold and how that debt is tied to LIBOR. Wait a minute. LIBOR goes away in what, 2 weeks? The end of this month? And they're still talking about these mountains of debt, and you can't get a straight number. So they're dead silent on this transition. Biggest experiment in history, impacts all of that debt, plus all of the derivatives, the bets on that debt, which is way bigger than the mountain of debt that's been created. And they're dead silent on it. Why are they dead silent on it? Why aren't they letting us know how close we are to complete collapse?
No, like I have to agree, and yet it's really interesting how, I don't know if he meant to say this, but I was listening to Anthony Albanese the other day in a presentation of his, and he talked, this is about supporting first home buyers, and they're going to do away with stamp duty. And Anthony Albanese actually said this, word for word, and he said, this is new money. New money.
Now, Albanese is our Prime Minister.
Prime Minister, yeah. This is...
Sometimes they say things and you go, do you ever think about what you're saying before you say that?
Yeah. I mean, and the people listening to they really get it. You know, but the manner in which these guys... Oh, by the way, just after that, only a day or two later, we heard that they were going to introduce more of these speed cameras because they were concerned about the amount of people on the road that were in accidents, and some were being, killed, of course. So they wanted to prevent that from happening. You've got to be kidding me. I mean, it's about generating revenue. That's really what it's all about, because they take in one hand, or they give in one hand and take from the other.
They have to, don't they?
Of course they do.
Yeah.
So we will all be paying for that stamp duty. Yeah, of course. But you go on and you look at some of the waste of money. Submarines in Australia. Now we're building 6 new nuclear subs, but it's going to take about 20 years to build. So in the meantime, they've got to maintain the existing submarines, 6 of them. Lynette, do you know the cost of maintenance on these 6 subs, right, for the next 20 years? It's $22 million a day, right? This
go up more because we're going to enter a period of hyperinflation. So it's going to make $22 million a day look cheap.
No, you're right. This is scary.
I wanted to say something on the first part about the first-time home buyers and how not just in Australia, but this is happening too globally, where they want the most naive buyer, the very first-time home buyer, to support or try and support the prices of homes across the world. And they can't do it. They're buying homes that they can't afford because the prices are still at nosebleed level. They're still unaffordable, but tacking on the higher interest to buy these houses. So they do a little this or they do a little that. But they're really setting these buyers up for a huge fall.
Oh, yeah. No, absolutely. I mean, and which leads me to Philip Lowe. Philip Lowe is our RBA, Reserve Bank of Australia, governor. And he just passed a comment just recently, and he said that we couldn't afford a national wage rise, and it's mainly for the lower end, those who need it the most. We said we can't afford to have this because it will create inflation, right? And I thought to myself, you've got to be kidding me. I mean, let's think about this for a moment, Philip. What's caused inflation? You have had interest rates at zero for the last 10 years, and you've cranked up the printing press. Money has been so available, that's right. And the combination of the two, you knew what it would bring about. We would overspend, we would overcommit, and then there would be a need for an increase in the pay packet. And that's what people have done, and that's what they're asking for now. Now, it's not going to help the cause, well, it will temporarily for them, but the point is, who created the problem in the first place? These guys are saying to us, no, you can't have any more. I mean, give me a break. Unfortunately, Lynette, none of these people, including Philip Lowe, have ever run a business. These guys, you'd look at the debt and you'd say, we can't go any further. If Brian and I were running a business and we were always in deficit, the banks had shut us down. And that's what happens to any conventional business. But these guys seemingly continue to get away with it. But you are right, in the end, the debt levels are just so extreme that, everything fails.
It does. And, a couple of other things about that, when you were saying that people don't listen to what they say before that. Well, number one, if you look at the prices that corporations have been able to charge, there is definitely inflation in those prices. These corporations took huge advantage of the fact that people were willing to pay up, and that increased their profit margins hugely. But you don't really hear the government talking about that, or the central banks talking about that. You don't hear about the fact that, wow, back in the early 70s, the average CEO pay to worker pay was 20 to 1, and now it's in the thousands to 1.
Wow.
Right? That doesn't cause any inflation, right? It doesn't cause any inflation when they do all of these special dividends and they take on debt to pay these special dividends. And what I don't remember which Bank of England person said this, but again, he came out and said, look, you're going to be poorer. Just get used to it. Stop asking for an increase in wages. Are you freaking kidding me? I mean, I couldn't believe that he was stupid enough to say something like that. It's just incredible. And the fact that these people aren't immediately trounced by the public is also incredible.
How about, Lynette, the suspension of the debt ceiling? Yeah, it is a joke. I mean, if we talk about inflation, what are we expecting to see now? I mean, the suspension, what does that mean? I don't think when I talk with a new client, Brian and I talk about that every day with new clients, and you say, do you know what that means? There was a limit before.
No debt limit right now, and they can spend however much they want.
Whatever they will.
And the other part of it, I mean, right now, when you're talking about suspending the debt limit, and then you have the Treasury Secretary, Janet Yellen in the U.S., issue a whole bunch of debt to fill up her checkbook, because this is debt that we've already agreed to. And that's the other part of it. They're not stopping it at the spending part. They're trying to stop it and fight over it at the paying part. So it would be like us going out and just loading up our credit cards and then going, well, should we pay this bill or not? Right? So they absolutely miss it. But isn't it so easy to spend other people's money? Meaning the taxpayers' money. And that's the other thing I don't think people really understand, that when the government says that they're spending money on this, they're spending money on that, they're spending yours and my money.
And money into the future because they overspend and they borrow it.
Oh, yeah.
You know, what I find really, really interesting is that we're talking about the death of every fiat money on the planet. This is a global hyperinflationary or hyperdeflationary. It's the same coin, just the opposite side of the coin. And they still, you know, when you listen to the talking heads or you read the papers, they always talk about it as if it can go on and on and on. And, oh, hey, buy this stock because it's going up, and buy this bond because interest rates are really high. And then when the interest rates go down, they'll go up, and blah, blah, blah. But you can only convert that garbage into this garbage.
Yes.
Yeah.
Oh, this is actually my bill. Yeah. It has my name, my picture on there. And in gold and silver, we trust.
There you go.
And then there's the purchasing power on the back of it, which I know it's tiny, but you'll have it in person soon. But people need to understand that we have the only reason why any of the currencies are viable right now is because the public still trusts them. But the public does not trust the Congress, does not trust the government officials, and the markets do not trust the central banks anymore because, hey, forward guidance, they gave up that confidence level. Central bankers don't trust central bankers because in 2015, there was the Swiss surprise with the Swiss central bank vowing to maintain a peg to the euro. And 2 days after they came out and said, that is our most important thing, they went, oh, okay, not important anymore. And banks don't trust banks. And we saw that in the interbank lending in 2008. So since 2008, you know, keep in mind, this is a Ponzi scheme. They can only get away with it if we allow them to get away with it. I think we need to stop them from getting away with it. And how do you do that? You vote with your wallet.
Yeah.
That's how you do it.
Yeah.
Well, it's important, I think, now more than ever before. I mean, what Lynette's saying is absolutely and totally correct. It leads me to another point that James Turk made just recently when he said that this postponement of the debt ceiling, he believes, is equivalent to the 1971 debacle when President Nixon took America off the gold standard. So that allowed them to print with reckless abandon. They had no limitations at all. This is the same. And so that being the case, I mean, we all know what happened to gold and silver during that period. I mean, gold went from $35 an ounce to over $800 an ounce, and silver $1.20 to $50 an ounce. So what are your expectations here now that we've had this postponement? They will print, we know that, they more than they ever have before. Do you tend to agree with James Turk that this could be an equivalent to typically the 71-80 debacle? Would be fantastic for holders of precious metals, that's for sure.
Well, I don't know that this particular event is equivalent to that, but I would definitely say the LIBOR SOFR shift is equivalent to that. I think they're going to keep it quiet and under wraps. I mean, there's got to be things that are happening inside of the financial system hugely, just because when the Fed raised rates, when the global central banks raise rates, the market value of all of those debt assets. So you're talking mortgages, you're talking student loans, you're talking car loans, you're talking derivatives, you're talking every single, even the debt that created this crap, right? Every single debt instrument out there, its market valuation is substantially lower, and we are all of us incestuously intertwined. And so that is being hidden. It's like all we see is maybe this much of the iceberg when the iceberg goes down from here to China, right? And they're keeping that hidden from us because that's their job, right? They can't tell us the truth, because if they did, we would make different choices. we would own a lot more gold and silver, right? People in the world would have a lot less wealth held inside of their scam of a system. And it is an absolute scam. Biggest scam, Bernie Madoff, nothing compared to these guys.
Insignificance, yes.
Chump change. So, there's absolutely no doubt, but that we have such a huge crisis that is just not obvious yet. But make no mistake about it, it is unfolding now, period. End of discussion. The banks that went out in March, that was just a little snicker snack of what's to come. Because this is true. I don't care if you're JP Morgan or you're the smallest community bank. This is true for every single bank, every single financial and corporate entity. Look at private equity. All this debt, to your point, Darryl, all of this debt that was taken out under the zero interest rate policy, well, guess what? As interest rates go down, the market value goes up. They could borrow against this higher market value, but that's now flip-flopped. So they're all underwater. When all of this debt has to roll over, they can't borrow as much because it's not worth as much. So what are these corporations going to do? They either have to come up with more equity or borrow less, which means they have to come up with more equity, or they're going to declare bankruptcy.
Yeah.
And then that's a ripple effect, right? That's like a domino effect, rather, where, look at how many large syndicated commercial real estate brokers that put all these big deals together, package them into REITs and sell them to the public, right? All of that property, they're walking away from it now. They're going, the interest, we're not making enough money. We're not as occupied, office building, mall, etc. So we're giving you back to the bank. If they had a non-recourse loan, then they're giving it back to those banks. Well, how does that impact the banks? And even if they don't give them back, what's the real value of those contracts that they signed when the value of the real estate was up here and now it's down here? I mean, and what about the holders of the REITs, the pension plans, the retirement funds? What about that? And then that impacts you and me. Do they want you to realize that you're impacted by that? No, because then you want to sell it. And what are they doing when people want to sell? When you get to a certain level, no, I'm sorry. Too bad, so sad you can't have your money back. And then what are you going to do? Because we know, what's that bottom line? If you don't hold it, you don't own it, regardless of your perception. And this is not the time to be running that level of counterparty risk. It's ridiculous. That's why I don't own any of that. And I'm an ex-stockbroker.
Lynette, it reminds me of a quote. No, Charles Schwab or Charles? Doesn't really matter. Politician, European, whatever.
Gold.
No, you'll remember when I say the quote was, "You'll be happy, but you own nothing."
Yeah, that's the World Economic Forum.
Exactly. Lynette, I've got a question. It's really two parts of the question. But the first part is about two quotes I'm going to read out, and they're from Ray Dalio. Now, I like Ray because he's, I've read a lot of his work, and he's a gold supporter. He's a 5 to 10% gold supporter. Now, his business is investing, so he just makes sure he's covered himself when it comes to his 10% gold. But here's his two quotes. If you don't own gold, there could only be two reasons. You haven't read history, and you don't understand the role of gold in the monetary system. Last quote, about 6 or 7 years ago. If you do have an excellent analysis of why you shouldn't have such an allocation to gold of between 5 and 10%, we'd appreciate you sharing it with us. He tells me he hasn't received too many emails on reasons why they shouldn't have 10% gold. But, that's what he's referring to. When he first made that quote, his asset base was about 14 billion. Now it's about 20 billion. So 10% of 20 billion is 2 billion. 2 billion in gold, not a bad figure, to make sure you're doing okay. But what I get from this, he says 10%. He doesn't say an amount. He says 10%. So it doesn't matter what you earn, you should be looking at your monthly salary and saying 10% into gold. Even if it's a gram of gold, in Australia, that'd be about $120, right? So even if it's a savings plan of a gram of gold per month, you're going to be so much better off for the future in the next 5 years. What's your thoughts there, Lynette?
Well, number one, I do like Ray Dalio as well. He does think that we are headed to a revolution, and I agree with that, because when people are bloodied and bruised and battered enough and all confidence is lost, and I hope we see that. I hope it's not a horrible thing, but we need a revolution to go back to sound money. But 10% for somebody like Ray Dalio, whose job is kind of trading in and out, that's one thing. Me personally, I am not a trader. I am quite clear on what's happening in the monetary system because I've studied currencies and currency life cycles since 1987. I know how deeply I dig into this stuff. So it doesn't make a lot of sense for me to have the lion's share of my wealth in an overvalued asset or instrument, meaning stocks, bonds, all that, ETFs, mutual funds, annuities, all that garbage. It makes no sense for me to hold my wealth there when there is not one doubt, and all of the evidence, it's not wishful thinking. It's just all of the evidence is that the only thing you can convert them into, this garbage, is losing value. Because last time I checked, 1 trillion times zero was still zero. So that's where I absolutely disagree, but he's in a different circumstance because he buys and he sells that stuff and he makes fiat money doing that. I'm all in. As an ex-banker, as an ex-stockbroker, and as somebody that is crystal clear, I'm going with the global central banks that have bought more gold than they have, going all the way back to the 60s. And what was happening in the 60s? We were transitioning into a new monetary system, one that was at that point quasi-backed by gold, to one that was backed by, to your point, the central bank's ability to just print more money and take on more and more and more and more debt, right? But the reverse is happening now. And the global central banks that have raised those interest rates have popped that debt bubble that has been in the works since the early 80s. And there is absolutely zero doubt in my mind, none, because this is how they do the transfer. We need this next crisis to scare people enough. And I think what happened in 2020 and 2021, it was a test. What can we get away with? How much can we get people to listen to what we're telling them to do? And I look at China and what happened with China in their absolute lockdown position. And then all of a sudden, they've had more protests than they have in decades, and they shifted what they were saying. So, and they went away from the zero lockdown policy. That gave me a big jolt of hope, because in that most surveilled and most controlled economy, we saw that when people come together, enough people come together, and they speak loud enough, it makes a difference.
Yeah.
So going back to Ray, I agree with him in many things, and I'm hopeful on some of those, but I think 10% isn't even marginally. I mean, why? Why? You're going to throw the 90% away? Why?
We could tell you, we haven't got the time today, but we can tell you about a joke that Egon von Graz put out when he was over here about 5 to 10%. But Look, I like Ray along with yourself. I don't go along with the 10%. And the main reason is simply because I'm not the great investor of all time. You know, he's certainly up there. And so he does what he does. He just wants to back himself. Something goes wrong, he's got $2 billion in gold there.
Because when you stop and think about how severely undervalued gold is, this could be Ray's way of saying that he thinks it will move up to cover all of his paper assets. That's how undervalued it is.
Yeah.
So I do agree with that. I mean, I know that it is severely undervalued.
Sure.
And we tell our supporters, our clients, that Darryl and I are pretty well all in as well. And it's quite an intelligent way of looking at it, because we, as you, think that gold and silver is money. It is whole 100% money. So but it's just different from paper. So when this whole calamity collapses, you've got real money, and you'll be able to support and buy different assets along the line. It might be farming land, it might be more real estate, but those prices will be a lot lower than what they are today. So yeah, we are pretty well all in.
Oh, absolutely.
Second part of the question, and then I'll finish. Central banks, we've discussed a little bit. So central banks have been buying. They bought last year 1/3 of the gold that we mined, and probably the same this year as well. Now, that 1/3 was 1,140 tonnes. Now, in the last 5 years, central banks have increased their position or gold exposure from 11% to 15%. Now, in 5 years, that's a 36% increase. So, bottom line is, your thoughts there, a little bit more about the central banks and why have they increased from 11 to 15% exposure?
Well, think about what the Bank for International Settlements said about gold. Number one, it runs no counterparty risk. All your debt, all those debt contracts, that's all counterparty risk. It is gold held at home, runs no geopolitical risk. So, and I mean, if you look out there is so much geopolitical risk, it's ridiculous. It is a proven inflation fighter. And there was one more thing, and I can't remember what that was. But global central banks, when you stop and you look at it in a recent survey done by gold.org on central banks and their attitude toward gold, 7 in 10 central banks have said they plan on increasing their gold purchases, because whoever holds the gold is going to be able to hold their power, hold their choices, and hold their freedoms.
Yeah.
That's really what's at stake, is your freedom. Your freedom to choose, the freedom to live. My grandkids, I mean, that's who I do this for more than anybody, or my children and my grandchildren and the great-grandchildren that I don't know yet. Because if we don't make this stand now to real money, and that's why the central banks are buying it, they know darn well what they're doing to the value of the currencies that are out there. They don't have any choice. It's not like this can be reversed, right? It's too late. We're at the end. And everybody knows it. Yeah. So central banks are definitely buying gold so that they can remain in control and in power. And that's exactly the same reason that individuals should be accumulating gold. 10%, I mean, that's nothing, right? You need to do as much as possible, as quickly as possible, because we don't know when this game is going to end. There are too many things that are erupting that we can't see because it's kept away from our purview. But when we do see it, I got news for you. It's going to be way too late to do anything about it.
I think, Lynette, our seminars in Sydney, Melbourne, and Adelaide are going to be firecrackers.
Well, they will.
Go ahead, Darryl.
Fully loaded. Fully loaded.
Fully loaded.
Look, we had another 30 questions we wanted to ask Lynette, but it's just been fantastic. We've got, well, I think we asked 3 questions. But look, what I would like to do, and that because constantly there's this reference to, I mean, gold and silver, we've all said, never get a mention, right? Really. The experts on TV, mainstream media never talk about it. Governments never talk about it, of course. We know that. But I just wanted to do this little exercise. I've never done this one before, so I thought I would. I bought a house. This is comparing real estate to gold as an investment. I bought a house in 1980. I paid $150,000 for it. The value now in
that was a nice house in 1980.
Oh, it was. It was a very nice house, and it was a brand new house, and there was nothing in the front yard, nothing in the backyard. It was just sand. Okay, so I had to build a landscape and do everything from there. But the value now on that property, I sold it 10 years ago. The value on that property now, and I know the owners, is about $1 million. So it's up approximately 650% in 42 years. Now, if you said to somebody, I paid $150,000 for a house, now it's worth $1 million, they go, wow, how good's that? But the point is 42 years. But it gets worse for real estate and better for gold in this illustration. So let's say I bought gold in 2000, which I did, Brian, and I did purchase quite a bit of gold then in 2001, 2002, 2003, all the way through. But let's say in 2000, it was about $400 spot. Today, it's $2,900. So we're up around 750%, 750% in half the time, 22 years. Right. So that's an important point to remember. However, when I bought the property, I said it was just front and backyard, need to be landscaped. I got a landscaper in, and we built a wonderful, lovely swimming pool in there, rock pond, koi swimming around it. It was a Balinese backyard. It was quite magnificent. I would never have been able to do it, but I got really good professionals in who could. And that cost a significant amount of money, of course. I also had to pay stamp duty on the property when I purchased it, and kitchen, bathroom renovations, general maintenance, council rates over 30 years, the period of time that I owned it. I did my sums, and it worked out to something like $300,000 that I had spent on that property in addition to the initial purchasing price. Now, I know that the new owners have spent around $50,000 on it, so that takes it to $500,000 that house has really cost to be standing as it is currently. And you get $1 million for it 42 years later. So it's up 100% in 42 years. Gold is up 750% in half the time.
And you have to ask yourself, though, is it because the gold and the house is worth that much more, or that this garbage is worth that much less?
Exactly. There's the answer. 100%. Yes. Lynette, look, wow. That was really...
I can't wait to...
That was a great conversation. I just can't wait until you come down to Australia.
And we are so excited about it. I am so excited about it.
We've got a lot in store for you.
Oh, you'll be even more excited once you're finished.
We've got a lot in store for you, and that'll be fantastic. Yeah. Look, on closing, a gentleman by the name of Charlie Tremendous Jones, many years ago, we referred to him regularly, made a statement, made many, but he made this one in particular. He said, in 10 years' time, you'll be in exactly the same position that you're in right now, apart from two things: people you meet and the books you read. And I couldn't agree with anybody more than that, because that's where all the information comes from. It's typical of what we've experienced today. And I'd like the viewers to know a little bit more about ITM Trading before we go. Can you just tell us a little bit about ITM Trading and how our viewing audience could make contact with you?
Absolutely. Well, ITM Trading has been around since 95. I got there in 2002. And we have really our programs. What we do that makes us different is that we actually have a strategy that's based upon those repeatable patterns that happens 100% of the time historically whenever we transition. So we try, we really help people create their own strategy. Of course, you can find us online. We have a YouTube channel, ITM Trading. We also have Beyond Gold and Silver because you need to sustain your standard of living. So that's about food, water, energy, security, barterability, wealth preservation, community, and shelter. And that's Beyond Gold and Silver. But, if you're in the U.S., you can always call us at 888-696-4653 or connect with us in some other way because we like human contact, which is why I'm coming to Australia.
Yes.
It actually is. Why? Because we love that human contact. That's everything. You said the people that you meet, absolutely, that's everything.
Yeah.
They'd like us to divide and conquer, but we got to stick together.
Well, for the people you meet and the books we read, the people we meet is Lynette Zang. The books you read is The Creature from Jekyll Island. I've read it 5 times, and I tell you what, I still get education out of it, man.
Yeah. Look, Lynette, thank you so much for that. Thank you for continuing to support this channel. I really appreciate it. And I'd like to also thank our viewers and our subscribers who constantly view this channel and give us the support they do. So very much appreciated. Let's just keep one thing in mind. You can keep a lot of things in mind, but Jim Sinclair, I'll never forget his statement, become your own central bank. Central banks own gold. We know why they own gold, to protect themselves, protect their currency, to give themselves power and influence. They don't want you to have it, but we can do something about that, and you can do it by owning gold. So, and having said that, Lynette, really looking forward to catching up again, and that will be fantastic. And
we'll have more time.
Yes. Oh, yeah.
You can ask me lots of questions. I love questions.
Of course. So until then, everybody, stay well, stay focused, and goodbye for now.
Goodbye for now.